Over 3.35 billion people every single day. That's how many active users Meta's platforms see. It's almost hard to wrap your head around, right? It's nearly half the entire planet.
That's the power of connection, isn't it? And today on the Deep Dive, we're going deep on Meta Platforms, the company that grew out of, well, Facebook.
We're going to dissect their core social connection and the advertising that drives it all.
We've got a really interesting mix of sources for this one. Market analysis, financial news, and even some of Meta's own company filings.
We're on a mission here to pull out the most important insights, the nuggets of gold. That'll help you decide if Meta's a good long-term investment. We're taking a classic value investing approach to really understand what's going on.
Absolutely. And to make it digestible, we've broken down the deep dive into two parts. First, we'll build a solid understanding of Meta's business, take a look at its leadership, and then assess its financial health.
Then in the second half, we'll switch gears to gauge market sentiment surrounding the stock, analyze who actually owns Meta, and conduct a thorough risk assessment using a SWOT analysis. We'll leave no stone unturned.
And stick around until the very end, because we've got a thought-provoking question for you that really gets to the heart of what Meta's future might hold. But first, let's break down how this behemoth of a company actually makes money.
Right. 3.35 billion daily users. How did they turn that into cold, hard cash?
Well, the answer at its core is advertising. You see, Meta offers these incredibly popular social media and communication platforms to us completely free of charge.
Yeah, we get to connect with friends, share our lives, build communities.
Exactly. And in return, they sell digital ad space to businesses who are, of course, very eager to reach that massive and highly engaged audience. It's a pretty fundamental model in today's digital age.
It seems simple on the surface, but I imagine there's a lot of complexity under the hood.
Well, absolutely. One of the most interesting things is the level of sophistication in their advertising approach. Think about it. Meta gathers an incredible amount of data about its users.
Yeah, age, interests, location, all that stuff.
Right. And they use that data to allow advertisers to target very specific groups of users. It's not just a matter of buying a billboard. It's like a highly targeted laser beam. But here's where it gets even more interesting.
Okay, I'm all ears.
They don't just have a set price list for ads. Instead, they run an auction system.
An auction. So businesses are actually bidding against each other.
Precisely. Businesses bid to reach certain demographics, and the final cost is influenced by a number of factors, like the bid amount and the ad's performance. Typically, advertisers pay when users actually interact with their ads, either by clicking on them or sometimes just by viewing them.
So it's a dynamic system constantly in flux?
It is. And while this advanced targeting is a major revenue driver for Meta, it also opens them up to, well, increasing scrutiny from regulators, particularly around data privacy.
Yeah, data privacy is a huge topic these days, and it's something investors should definitely keep an eye on.
Absolutely. It has the potential to significantly impact Meta's business in the future.
Now, it's not just those classic newsfeed ads anymore, right? I feel like Meta's been branching out, trying to find new ways to make money.
You're absolutely right. They're actively diversifying their revenue streams. One major area of focus is Reality Labs.
Reality Labs, that's their VR and AR division.
Exactly. They're developing hardware like the Meta Quest headsets, those virtual reality goggles, and all the software that goes along with them.
The metaverse, right. Everyone's talking about it.
Exactly. But they're not stopping there. They're also dipping their toes into subscriptions.
Like Meta Verified.
That's one example. And they're even experimenting with ad-free options in some regions. Then there's e-commerce, which is really gaining momentum through features like Facebook Shops and Instagram Checkout.
I've definitely seen those. It's super convenient to buy things right there within the app.
And it creates a seamless shopping experience for users. And we can't forget the WhatsApp Business platform.
Right, that's aimed at businesses, helping them communicate and manage customer interactions.
Exactly. It's become an important part of their other revenue segment.
So let's look at the numbers. In 2024, their total revenue hit a staggering $164.50 billion.
That's a mind-boggling figure.
It is. And even with all these diversification efforts, around 98% of that revenue still came from advertising.
Which really underscores just how dominant that core business remains.
However, that revenue grew by a whopping 22% year over year.
A very healthy growth rate indeed. It suggests strong momentum, even in their mature advertising business.
So the takeaway here is that while advertising remains the cash cow, Meta is clearly making strategic moves to build a more diversified and resilient revenue base. Now let's do a quick overview of their main products and services. We'll skip the basics, but it's worth highlighting the breadth of what they offer.
Agreed. We've got Facebook, of course, the original social networking giant, still going strong. People use it to connect with friends and family, join groups, and even buy and sell things through Marketplace.
I still use Marketplace all the time. Then there's Instagram, which has become a visual powerhouse.
Absolutely. It's all about photos and videos. It's a hub for influencers, a major platform for product discovery, and brands are leveraging it heavily for marketing.
Messenger, their instant messaging app, is seamlessly integrated with both Facebook and Instagram.
Right. And WhatsApp is the global messaging king, known for its strong focus on security and privacy. They've also got Threads, which is their newer platform for text-based conversations, sort of like a competitor to Twitter.
A lot of people are curious about what's going to happen with that one. On the VR and AR front, the MetaQuest headsets are getting a lot of buzz.
Absolutely. They're not just for gaming anymore. They're being used for all sorts of things, like virtual meetings and Horizon workrooms.
And the Ray-Ban Meta smart glasses. That's a really interesting move into wearable tech.
It is. It shows they're thinking about how to integrate technology into our everyday lives. Beyond that, we've got Meta AI, their virtual assistant, Spark AR for creating augmented reality experiences, and MetaPay for making payments within their ecosystem. They did discontinue Portal, though, their video calling device.
Yeah, that one didn't quite take off, but the sheer scope of their current offerings and their investments in the future of digital interaction, it's remarkable.
Truly. Okay, let's zoom out a bit and talk about Meta's position in the market.
We all use their platforms, but what does their global reach look like in concrete numbers?
Well, Meta is the undisputed king of social media. They're the largest social networking company worldwide. In 2024, they reported an astounding 3.35 billion daily active users, and that number is still growing at about 5% annually.
Wow, 5% growth on a user base? That massive is impressive.
It is. And when you consider monthly active users across all their platforms, we're talking about nearly 4 billion people.
That's a huge chunk of the global population.
It is. And that scale creates something called network effects, meaning the more people who use these platforms, the more valuable they become to each individual user. It's a powerful competitive advantage.
So size does matter in this case.
It definitely plays a role.
Yeah.
And financially, as of March 2025, their market capitalization was $1.461 trillion USD, making them the 7th most valuable company globally. That's a big deal.
Huge. And their Q4 2024 advertising revenue came in at $46.8 billion, a 21% jump year over year.
Driven in part by a 14% increase in the average price of their ads. Clearly, their advertising machine is still humming along nicely.
Now, it's interesting to note that Facebook, their original platform, remains particularly popular among the 25-34 age group. You sometimes hear concerns about younger users drifting away, but that core demographic seems to be holding strong.
It's a valuable demographic for advertisers. And another interesting point, Meta stock has actually outperformed some of the other tech giants in the Magnificent Seven lately.
Really? Why is that?
There's a lot of investor excitement around their investments in artificial intelligence, or AI. It's seen as a key area for growth and innovation, and Meta is making aggressive moves to capitalize on it.
So, to summarize, Meta benefits from its massive user reach, the vast amount of data it collects, and its highly profitable and well-established advertising model. It all adds up to a very strong competitive position. Now, let's talk about value. What's in it for us as individuals and for businesses too?
Good question. For individuals, the primary value proposition is connection. It's about staying in touch with friends and family, sharing our experiences, and building a sense of community.
It's become such an integral part of how we live our lives.
It has. With over 3 billion people interconnected through Meta's platforms, they've created an entirely new way for people to interact socially.
What about for advertisers? What do they get out of it?
For advertisers, the value lies in that unparalleled access to a massive and engaged global audience. Plus, they get incredibly sophisticated targeting capabilities, which allows them to run very effective and measurable marketing campaigns.
It's a dream come true for marketers. They can really hone in on their ideal customer.
Precisely, and for businesses themselves.
Well, they get access to tools like the Meta Business Suite and the WhatsApp Business Platform, which help them build an online presence, engage with customers, and even conduct transactions through features like Facebook Shops and Instagram Checkout.
It's a whole ecosystem for businesses to thrive in the digital world.
And looking even further ahead, Meta's big bet on the metaverse has the potential to create entirely new avenues for connection, interaction, and commerce.
It's still early days, but it's definitely an exciting area to watch.
So key takeaway number 1, Meta operates a sprawling network of platforms that connect billions of people globally. Their primary moneymaker is advertising, leveraging the vast amounts of user data they collect. They're also making long-term investments in areas like VR, AR, and the metaverse with the aim of diversifying their offerings and revenue streams.
Now, let's shift our focus to the people at the helm of this massive ship, the management team. Evaluating their capabilities and integrity is a crucial part of understanding any company.
Absolutely. And we're talking about the company that was originally called Facebook, right?
Right, and that was founded by,
Mark Zuckerberg.
yeah,
He co-founded Facebook back in 2004, and he's been the chairman and CEO ever since. That's a long time to be at the top, especially in the fast-paced tech world.
it is. And during his tenure, the company has seen unprecedented growth, transforming from a college social network into a global behemoth.
It's a remarkable story. He's not a one-man show, though, right?
Of course not. He's got a very experienced executive team supporting him. There's COO Javier Olivan and CFO Susan Lai, both of whom have been with the company for many years. And then there's CTO Andrew Bosworth, who's been instrumental in their technological advancements, particularly within Reality Labs.
And the board of directors is composed of individuals with diverse backgrounds and expertise, which is always a good sign.
Definitely. Now, there was a notable event in 2024 when the company went through a round of layoffs.
Right, that made headlines.
Zuckerberg's public explanation was that the layoffs were necessary to increase efficiency and remove underperforming employees. However, some employees who were let go reportedly had strong performance records, which raised some eyebrows.
Yeah, it led to speculation that the layoffs might have been more strategically driven by a shift in focus towards AI.
That's a possibility. And it raises questions about the transparency of their performance evaluation processes.
It's definitely something to consider. Now, let's talk about Zuckerberg's leadership style.
He's often described as a transformational leader. He has a clear vision, he's incredibly ambitious, he's good at motivating his teams, and he fosters a culture of innovation.
Always pushing the boundaries, thinking about the future.
Exactly. And there are reports that his leadership style has evolved over time, becoming more collaborative.
Meta has had its fair share of controversies over the years. It seems like every few months there's a new headline about something.
Well, when you operate at the scale they do, and you're dealing with such sensitive issues, it's bound to happen.
True. And we're talking about an era of interconnected global challenges. Things are complex.
Very true.
But some of the crises they faced have been particularly significant, like the Facebook Cambridge Analytica data scandal back in 2018.
That was a major breach of trust. User data was misused, and it sparked a huge public outcry. Zuckerberg issued public apologies and testified before Congress.
It really put a spotlight on the issue of data privacy.
And it led to increased regulatory scrutiny, which continues to this day.
Another ongoing challenge for them is dealing with misinformation on their platforms.
Right, especially around sensitive topics like elections and health information. It's a constant battle.
They've implemented policies, partnered with fact-checking organizations, but the debate continues about how to effectively moderate content while respecting free speech.
It's a tough balancing act, and it's not just about misinformation. They've also faced criticism over the spread of hate speech and harmful content.
And there have been allegations of bias in their algorithms and content moderation practices, with some arguing that they favor certain viewpoints over others.
Those are serious concerns. Then there was the 2019 incident where a large number of user passwords were stored in plaintext, which resulted in regulatory fines. And more recently, they were hit with a $1.2 billion fine from the EU over data transfer practices.
It seems like they're constantly being challenged on multiple fronts.
They are. To their credit, they have launched initiatives aimed at positive social impact, like the Crisis Response Hub, which helps communities affected by disasters.
It's good to hear.
But even those efforts have faced criticism, as we saw with the debate surrounding their content moderation policies during the recent conflict between Israel and Palestine.
It seems like there's no easy answer when you're operating at that scale.
It's incredibly complex. In terms of transparency, they do have a transparency center where they share information about their policies, enforcement practices, security protocols, and even research reports.
And Zuckerberg has historically used his annual letters to shareholders to outline the company's broader mission and vision.
Right, those letters provide some insight into his thinking.
Now, one aspect of Meta's corporate structure that has raised some concerns is their dual-class stock system, which essentially gives Mark Zuckerberg majority voting control.
That's right. It means he has the final say on major decisions, even if other shareholders disagree.
Some investors worry that this limits their influence and potentially exposes them to greater risk.
It's a valid point.
Yeah.
And while they are transparent about their community standards, which outline what's allowed and not allowed on their platforms, there have been calls for more transparency about their algorithms and how they make decisions about moderating politically sensitive content.
It all adds up to a complex picture when evaluating Meta's management.
It does. On one hand, they've shown remarkable capability in building and growing the company to its current size and influence.
They've also taken steps that could be seen as shareholder-friendly, like initiating dividends and continuing their share buyback program.
But they've also faced significant ethical challenges and controversies.
And the concentrated ownership structure, with Zuckerberg's outsized voting power, is a factor that investors need to weigh carefully. It comes with both advantages and disadvantages.
Absolutely. Now let's move on to the numbers, shall we? It's time to assess Meta's financial health, going beyond those impressive revenue figures we discussed earlier.
Perfect. So walk me through some key financial metrics. What should investors be paying attention to?
Well, their market cap, as of our recording date, is around $1.461 trillion USD, and their price-to-earnings ratio, or PE ratio, is currently in the 23 to 24 range.
So what does that actually tell us?
A PE ratio in that range means investors are currently paying about 23 to 24 times Meta's earnings per share for a piece of the company.
Okay, so it's a way to gauge how much the market values the company relative to its earnings.
Exactly. And it suggests the market is expecting continued growth and profitability from Meta. And as we mentioned, they achieved a robust 22% year-over-year revenue growth in 2024.
Very healthy growth. Now let's talk about profitability. What kind of margins are they generating?
Their profit margins are very strong. In 2024, they reported an operating margin of 42% and a net income margin of 38%.
Wow, those are impressive numbers.
They are. It indicates a highly profitable business model.
Now, debt is always something to keep an eye on. How much debt does Meta have?
They've actually managed their debt quite prudently. Their debt-to-equity ratio is low, around 0.3, which is favorable compared to their industry peers.
So they're not over-leveraged, which is a good sign.
Exactly. Their long-term debt at the end of 2024 was $28.83 billion, but it seems manageable given their massive earnings and cash flow.
Speaking of cash flow, how much free cash flow are they generating?
They are a cash flow machine. In 2024, they generated $52.1 billion in free cash flow, with over $13 billion in Q4 alone.
That gives them a lot of financial flexibility to invest in new initiatives, make acquisitions, or return capital to shareholders.
Absolutely. Finally, let's look at their price-to-book ratio, which is sometimes called price-to-equity.
What does that tell us?
It's currently around 8.00 to 9.9, which indicates that the market values Meta significantly higher than its accounting book value.
So investors are willing to pay a premium for Meta's stock.
They are. This often reflects confidence in the company's future growth prospects and the value of its intangible assets, like its brand and technology.
So to answer our question about financial health, it seems like Meta is in a very strong position. They're highly profitable, they have a healthy balance sheet, manageable debt, and they're generating a lot of cash. Now, let's talk about their track record. How consistent has their financial performance been over time?
Looking back over the past 5 to 10 years, the general trend for Meta's earnings has been upward. They've generally grown their earnings year after year.
That's a good sign.
It is. However, the specific growth rates have varied, sometimes quite a bit, depending on economic conditions and their own investment cycles.
That's to be expected. No company grows in a perfectly straight line.
Right. And to really dig into the details, we'd need to examine their income statements over the years and look for patterns and anomalies.
So investors should do their homework and look beyond the headline numbers.
Always.
Now, Meta only recently started paying dividends, right?
That's correct. They initiated a quarterly dividend in 2024, which was a pretty big deal.
It was a sign that they were becoming more mature as a company and were looking for ways to reward shareholders.
Exactly. And they followed that up with a 5% dividend increase in Q1 2025, suggesting they're committed to growing those dividends over time.
That's good news for income-seeking investors. Their debt management seems to be quite prudent, as we discussed.
Yes. Their low debt-to-equity ratio and strong free cash flow give them plenty of breathing room.
What about working capital? How efficiently are they managing their short-term assets and liabilities?
To fully assess that, we'd need to delve deeper into their balance sheet and cash flow statements, looking at things like how quickly they collect receivables and pay their bills.
So the details matter.
They always do.
Okay, to recap our financial health assessment, while their earnings growth hasn't always been perfectly smooth, The overall trend has been positive. They have a solid financial foundation with no excessive debt and a healthy cash flow. Now, before we jump into the second half of our deep dive, let's take a quick break to hear from our sponsor.
All right, we're back and ready to dive into the second half of our Meta Deep Dive. We've got a lot to cover, including market sentiment, ownership structure, and a comprehensive risk assessment.
Sounds good. Let's kick things off by talking about how the market perceives Meta right now. What's the general sentiment?
What are people saying? Are investors feeling optimistic?
Well, the overall sentiment seems to be pretty positive. Their recent financial performance has been strong, they've started paying dividends, and there's a lot of enthusiasm around their investments in artificial intelligence. Investors seem to believe in their long-term growth potential.
So they're checking a lot of boxes. They are. And remember how we mentioned earlier that Meta stock has outperformed some of its peers in the Magnificent Seven lately? That's a clear indicator of positive sentiment.
Makes sense. Now, what are the analysts saying? What kind of price targets are they setting?
Analyst sentiment is generally optimistic as well. The price targets I've seen range from about $505 on the low end to $900 on the high end, with the average target around $763.34.
So there's a pretty wide range of opinions, but the average suggests there's still room for the stock to move higher.
That's right. But it's important to remember that these are just targets, and they can change as analysts get new information and update their models. Jefferies, for example, recently adjusted their price target, though the direction of that adjustment isn't specified in our sources.
So it's a fluid situation, as always. Now, how have recent events and news flow impacted the market's perception of Meta?
Well, the strong Q4 2024 earnings report and the subsequent dividend increase definitely gave sentiment a boost. And their aggressive plans to invest heavily in AI infrastructure seem to be resonating well with investors.
Okay, so they're making moves that are being well received by the market.
It seems that way.
You know, it would be interesting to see data on short interest and options activity. That can sometimes give us a more nuanced view of market sentiment, especially any underlying bearishness.
Absolutely. Those data points can provide valuable insights into investor expectations and potential volatility.
All right, let's shift gears now and talk about ownership. Who are the key players that hold significant stakes in Meta?
A large chunk of Meta's shares is held by institutional investors, mutual funds, pension funds, hedge funds, that sort of thing. This is pretty typical for large, publicly traded companies.
It shows that Meta is a core holding for a lot of big investment firms.
Exactly. And Vanguard is often mentioned as a particularly large shareholder.
Now, what about insider ownership? We know Mark Zuckerberg owns a big piece of the pie.
Oh, he definitely does. He holds a substantial amount of Meta's equity. And crucially, he controls a majority of the voting power through a special class of shares.
So he has a lot of influence.
A lot of influence. To get a detailed breakdown of recent insider transactions, buying or selling activity, we'd need to look at their SEC filings. But it's safe to say that Zuckerberg's ownership stake gives him significant control over the company's direction.
So we're talking about a highly concentrated ownership structure. What are the implications of that?
Well, on the one hand, it allows for quick and decisive action. Zuckerberg can essentially implement his vision without too much resistance from other shareholders.
Which can be good or bad, I suppose, depending on whether you agree with his vision.
Precisely. However, it also means that other shareholders have less influence. Their votes carry less weight.
And how does this impact Meta's corporate governance?
It's a key consideration. While there is a board of directors in place to provide oversight, Zuckerberg's controlling stake gives him a lot of authority. This is something investors should be aware of, as it differs from companies with more dispersed ownership, where shareholder votes have a greater impact.
Okay, let's move on to our risk assessment. We'll use a SWOT analysis to systematically identify Meta's strengths, weaknesses, opportunities, and threats.
Sounds good.
Yeah.
Let's start with the positives. Meta's strengths. What are
Yeah.
their key advantages?
Well, their user base is absolutely massive, as we've discussed,
Yeah.
and that sheer scale creates powerful network effects, making their platforms more attractive to users the larger they get.
Right, it's a virtuous cycle. And their advertising platform is incredibly sophisticated, leveraging the vast amounts of data they collect to enable highly targeted advertising. This is a huge advantage in the competitive digital advertising landscape.
They're also known for their technological innovation and have invested heavily in building a robust infrastructure. And of course, they have incredibly strong brand recognition around the world.
Absolutely, those are some serious strengths. Now, let's flip the coin and talk about their weaknesses. What are some of their vulnerabilities?
Well, privacy concerns and data security issues have been a recurring theme for Meta. They've made efforts to address these concerns, but it remains a potential vulnerability.
And they're highly dependent on advertising revenue, which can be cyclical and subject to economic downturns or shifts in advertiser behavior.
Right, if advertising spending dries up, Meta would feel the pain.
They would. And content moderation continues to be a major challenge. Finding the right balance between allowing free expression and preventing the spread of harmful or misleading content is incredibly difficult.
It's a tightrope walk. And they're also facing some headwinds in terms of engagement, particularly among younger users who are increasingly drawn to newer platforms.
That's a trend they need to monitor closely. Now let's talk about opportunities. What are some of the exciting possibilities on the horizon for Meta?
The metaverse is a big one. They're betting big on it. And if it takes off, it could create entirely new revenue streams and ways for people to connect and interact.
It's a bold bet, but the potential is enormous. They're also well-positioned to expand their e-commerce offerings through platforms like Marketplace and Shopping.
Right. They already have a massive user base and a lot of data on their shopping habits.
Exactly. And advancements in AI and machine learning could further enhance their platforms, improve ad targeting, and create new features and services.
And they have their messaging platforms, WhatsApp and Messenger, which they could potentially leverage for new forms of communication and monetization.
Absolutely. Lots of possibilities there.
Yeah.
Finally, let's talk about threats. What are some of the external factors that could pose challenges to Meta's business?
Well, regulatory scrutiny is a big one. They're facing increasing pressure from regulators around the world on issues like privacy, antitrust, and content moderation.
And the competitive landscape is fierce. They're not just competing with other social media platforms. They're also facing competition from tech giants like Google, Apple, and Amazon.
Right, it's a battle of titans. And the pace of technological change is relentless. New technologies and platforms could emerge that disrupt Meta's business model.
That's always a risk in the tech world. And shifts in user preferences, particularly around privacy and data usage, could impact their growth. We're already seeing some of that with younger users.
And data breaches and cybersecurity incidents are an ongoing concern. A company with as much data as Meta is a prime target for hackers.
It's a constant battle to stay ahead of the bad guys.
Okay, we've covered a lot of ground in this deep dive. Let's wrap things up with a concise conclusion.
All right. We've seen that Meta holds a dominant position in the growing industries of social media and digital advertising, with significant potential in the emerging metaverse. They have some serious competitive advantages, but their management has also faced ethical challenges and controversies.
Their financial health looks very strong, and the market seems to be optimistic about their future. However, they operate with a concentrated ownership structure, and they face a number of external risks and opportunities.
Now, thinking back to the value investing framework we discussed at the beginning, understanding the business, assessing long-term prospects, evaluating management, and considering the price, where does Meta stand?
It's time to answer the big question. Is Meta a buy, a sell, or a hold?
Based on the information we've analyzed, Meta appears to be a hold for long-term investors. There's definitely potential for further upside, particularly if their investments in AI and the metaverse pay off. However, they also face ongoing regulatory and ethical risks, and their current valuation is already quite high.
So investors need to carefully weigh the potential rewards against the risks.
Exactly. And it will be crucial to monitor their progress in diversifying their revenue streams, navigating the evolving regulatory landscape, and executing on their metaverse strategy. The recent initiation of dividends and their continued share buyback program are also positive signs for shareholders.
It's a complex picture, but that's what makes it so interesting to analyze. And now, for that thought-provoking question we teased at the beginning.
Oh, yes, the big one.
Given Meta's substantial and long-term investment in the metaverse, how might our fundamental understanding of social connection itself evolve over the next decade? And what new challenges and opportunities might this present for both the users of these platforms and for Meta as a company?
That's a really great question. It gets to the heart of how technology is shaping our relationships and our sense of community.
It's something to ponder as we watch this space evolve. Now, before we sign off, we want to encourage you, our listeners, to dig deeper into the topics we've discussed today and form your own opinions about Meta platforms.
Do your research, stay informed, and don't be afraid to challenge your own assumptions.
And if you enjoyed this deep dive, make sure to subscribe to our show so you don't miss future episodes where we'll be dissecting other fascinating companies and trends.
And don't forget to check out the Stock Analytics AI YouTube channel for more in-depth financial analysis tools and resources.
Finally, a quick but important disclaimer. The information we've shared today is for informational purposes only. It's based on our interpretation of the research data we gathered, which may have involved the use of AI tools in the summarization process. Always do your own thorough research and consult with a qualified financial advisor before making any investment decisions.
We'll see you next time.
Until then, happy investing.